explain the doji on the floor. So when you have a candle looking like this, right? When you have a candle looking like this, chat, it's very key to read candles backwards. Like learn to reverse engineer candles, because you'll be able to understand what every candle is printing without even looking at it. When you have a candle looking like this back to back, what's being printed here? You opened up. So let's say in some given universe, this is what price is printing, right? Like you're printing a bullish candle, and then the next candle comes completely back down like this. What's being printed? Look where you opened up. This is the open, right? Think about it. This is the open. If this is the open, this is a close, but then this is the next candle, and it closes with right here. If it closes where the last candle opened up, what's being printed? You're now gonna have a candle. See the little gap right here, like a small little gap right here. You now have what's called a doji candle, a bullish doji in this case. So this equals this. Where's the high? The high is up here. Where's the low? The low's down here. So easy. All you gotta do really is say, okay, cool, this is the candle. It's a knife. Okay, so like you have a high, you have a low. Like this is what's being printed, bro. So when you have this, what's being formed? This is a doji candle. That's all that is. So when you have a doji candle, what else is being formed on from a different perspective? This is in candle formation. This is if you were to sum up the candles into a higher time frame candle, and in terms of structure, what happened? So let's break it down bit by bit. You opened up here, all right? So if you opened up there, this is where you opened up. You came up and made you came up and made down a low, right? You came down, create a bottom wick. You came back up to make a high, which was here, and then where'd you close? Right here. So then you're looking like this. So what's being printed now? These are higher highs, higher lows, right? But then the next candle, what does it do? It ends up coming back into the range. So therefore, what happens now? The next candle opened up, and this is what it did. It continued down towards here or towards here, and then now it's like here, right? So like overall, so you see how like the red side, this sums to this candle, whereas the blue side sums to this candle. So what's being formed in terms of market structure now, chat? You're breaking structure. You broke structure here. In this case here, you have a minor resistance here. You can say now you have a minor support here. This is the range that you're sitting in right now, and this is kind of where you broke down from. So you came back to the range, now you stay in the range. So like when you have a doji, this is being presented in terms of structure. This is being presented in terms of the candles, and this was being presented in terms of like if you were to sum up the candles and read it from a higher time frame scale. So when you see this, not a lot of traders can read it this way, but automatically in my head, when I'm looking at this candle, I'm looking at opium. Now I'm playing. When I look at this candle here, chat, I'm seeing this at the same given time. I'm seeing this at the same given time. So when it comes back to price action, where's the 4? In this case here, I should have done the example so it's less confusing. But in this case here, chat, like you had a bearish candle first and the bullish candle. So the example I showed you guys was a bullish candle first and the bearish candle, which again, it'll be a little confusing here, but like let's say, let me just do that again, okay? So let's pay attention to this right here. This is show those two candles there, okay? You have a bearish candle first. So where's the high being created? Highs here, lows there. Let me just use yellow so it won't confuse you guys between the bullish bearish candles. Bullish candle here, or high there, low there. So what happened over on this candle? If you were to look at, let me just draw it here so it's a lot easier actually. You have a bearish candle here, right? Next candle is what? Bullish. Looking like this. Let's say it closes here. So that's how it looks, right? Let's say it closes here now. What do you have on, if you were to look at this candle, chat, and break this down to one candle, what do you have? You then would have, I'll say, candle opened up here, sorry, here, right? Came down towards here, and then it closed. The next candle ended up coming like this. So now what you have is an overall bullish candle. Or sorry, you have a bearish candle. Okay, this is a bad example right here because this one doesn't look doji, but let's say it did close like a little higher, right? Like this. So therefore it's doji. So if you were to look at this candle and reverse engineer it into overall one candle, what you're gonna have now is you're gonna have a bearish doji, right? Just like vice versa what we drew earlier, right? You have a bearish doji because what? This is a high right here. This is a low, right? This is where it opened up, and this is the next candle. It closed right here, leaving that little gap right here, which makes you that little bearish doji candle. So when you have that overall being printed in terms of structure, so going back to this equals that. And what's also being printed in terms of structure? What would you have? You have the move that started from up here. So this is the opening. So let's go ahead and draw that down. You have the opening. It came up for a top wick first. Came up for a top wick first, so that was the high, and then it came down and make a low, which is down here. So it came all the way down towards here, and then the very next, and then it closes right here, right? Because this is where it kind of closed off at right there. And then the next candle, which is the bullish candle, did what? It came all the way up as well, or it came down, create a little bottom wick because you have a little wick there, and it came all the way up right here, create a top wick there, and it ended up looking like this. So what's being printed now? The reason why I said earlier about this being like, if you were to close like this is a doji, is because it is a doji. It equals this, right? So if it equals this in terms of structure, this is where things will start to click for you. Because if you aren't able to read what this is, then you'll for sure be able to read what this is. Look at what's being printed. You now have a bullish structure. You're once bearish. You had structure being formed down here. You're now closing above those areas to the left there. This is the range you're in previously. You're breaking above there. Therefore, these are just higher highs and higher lows being printed now, right? So the next candle, if this candle were to close a little stronger bullish in the 4 in about 14 minutes here, then you're overall expecting it to continue driving up like this, right? So that's why this resistance that we had drawn in the 4-hour candle doesn't matter, because the structure on the small time frame indicates that you're going to continue up with what you have formed. So when you do continue up, what happens next? The next candle, in terms of this, will continue to drive up like this, right? This is the next candle basically. And then as you have it on this graph, what's being formed is you're printing the bottom wick, which is down here, and then you continue up to make a high, and then it's just new higher lows being printed. So since this is, if you want to get a little deeper into it, since this right here, and this might confuse you guys, so you guys gotta pay attention if it's too much already, but like, let's say this right here is like a mini range being printed. What do you have, chat? Drive range liquidity. You guys know that, right? Drive range liquidity, drive range liquidity, drive range liquidity, drive range liquidity. So when you have DRL, this is what? A drive. This is what? A range. What's this going to be then? Oh my gosh, a bottom wick. Oh my gosh, it's a lower low being formed, or higher low being formed. Oh my gosh, it's a bottom wick for liquidity. It's liquidity, right? Drive range liquidity. So when you have all of that being presented at the same given time, and you have this, or you can say even a fake out too. Some say a fake out, right? To keep it simple as a playbook. But this is just a liquidity being formed. So when you get the bottom wick next, you can say, cool, I'll wait for a bottom wick. Well, after I get a bottom wick, I'll wait for a closure back into the range. If you close back into the range, we going up, because this would print, this would print, and this would print. So I'm not talking about my ass. I'm just talking about what price is printing. I'm just breaking it down to other different time frames, right? And that's what's being printed, chat. That's literally it. So when you see a doji candle, it's not just for me a gravestone doji. Like, you can call it that, right? For sure. You can name the candles what they are, but at the end of the day, like, your job is, if you could reverse engineer those candles and read and learn to read them without seeing them being printed, it goes a long way. So that's just that's what I see from depending on how you close, but where is it? This candle right here. If you were to close like 2318, that's what I would expect the next candle to do. I'm expecting this next candle to continue driving up. Why? Not just because I feel it, but because what's being printed is whatever we just drew out, the structure. Right? Make sense, chat?